This is Eyewitness News, the news leader, with Diana Williams and Sade Bedouinois, and Lee Goldberg with the exclusive AccuWeather forecast. Now, Eyewitness News at 5.
As he said, we're turning now to our discussion on the economy. We've been flooded with a lot of questions on our website. People certainly worried about their finances right now. And joining us tonight to answer some of the viewers' questions is investment advisor Richard Bregman, CEO of MJB Asset Management. Richard, thanks for being here.
Hey, you're welcome.
We got some great questions from viewers. They really have some interesting ones. So let's take a look. This is our first question emailed to us from Hazel in New York City, and she writes, I have a Roth IRA with Oppenheimer funds, which is not insured by the FDIC. Should I move my money to a bank that is FDIC insured? My broker, though, is saying, hold on. Yeah, what do you say to Hazel?
Well, it's a great question from Hazel. It's really two questions in one. The safety issue, the FDIC, she doesn't have to take her money out of the Roth to get safety. There are safe investments inside of her Roth IRA, including U.S. Treasury bills, and her broker ought to be able to purchase broker-bought CDs that are FDIC insured. So that ought to satisfy that part. There's an implied question in there, which is, should I take my money out of the funds and go to a bank? It suggests she's in the stock market and stock market funds. The question of whether to move out of the market into something safe now is a completely different question. It depends on her individual circumstances and where she is. Her broker ought to be able to give her advice on that.
Okay. And the idea that FDIC insurance may be going up to $250,000 is a big help for a lot of people.
That's a big help.
And reassurance.
It's a big reassurance. And don't forget, the U.S. government has announced a plan where they're insuring money market funds inside brokerage accounts for the next 12 years. So if Oppenheimer is part of that program, she ought to be safe.
Okay. Let's go to another question. This question was emailed to us from Peggy. She's in Jamaica, Queens, and she says, as a New York State employee, will my retirement pension fund and deferred compensation be affected by the current economic crisis? What do you have to say to that?
The short answer to that is no, for the most part. The New York State Constitution, as I understand it, precludes the state from diminishing or impairing pension payments to people who are currently covered. As long as New York State is in business, they ought to be making the payments, and they have the capacity to raise money through taxes and debt offerings. And of course, the state is continuing to put money into the pension plan.
Okay, okay. So that's good to know.
That's good.
We continue to get questions, and we thank the viewers for sending in questions. So hopefully you'll be back with us to answer some more. Thank you so much,
I look forward to it.
Richard.
Thank you.
And if you do have